Various forms of business entities. Businesses can take on different legal structures, each with its own advantages and disadvantages. The choice of business entity is a crucial decision that impacts aspects such as liability, taxation, and management. Here are the main forms of business entities. 1. Sole proprietorship. Description: owned and operated by a single individual. Advantages: easy to set up and manage. Direct control by the owner. Simplified tax reporting. Disadvantages: unlimited personal liability. Limited access to capital. Reliance on the owner's skills and resources. 2. Partnership. Description: a business owned and operated by two or more individuals. Advantages: shared decision-making and resources. Simplified tax reporting for general partnerships. Broader skill sets and expertise. Disadvantages: unlimited personal liability in general partnerships. Potential for conflicts between partners. Limited access to capital compared to corporations. 3. Limited liability company, LLC. Description: a hybrid business structure that combines elements of a partnership and a corporation. Advantages: limited liability for members. Flexible management structure. Pass-through taxation. Disadvantages: complexity in some jurisdictions. Limited access to capital compared to corporations. Potential for disputes among members. 4. Corporation. Description: a legal entity separate from its owners, shareholders. Advantages: limited liability for shareholders. Access to capital through the sale of stocks. Perpetual existence. Disadvantages: double taxation, C corporations. More complex structure and governance. Stricter regulatory requirements. 5. S corporation. Description: a corporation that meets specific Internal Revenue Service, IRS, criteria to avoid double taxation. Advantages: limited liability for shareholders. Pass-through taxation. Access to capital through the sale of stocks. Disadvantages: stricter eligibility criteria. Limited number of shareholders. Restrictions on types of stock. 6. Nonprofit organization. Description: an organization formed for a purpose other than making a profit. Advantages: tax-exempt status. Eligibility for grants and donations. Fulfills a social or charitable mission. Disadvantages: limited ability to generate revenue. Restrictions on political and lobbying activities. Regulatory oversight. Choosing the right form of business entity depends on factors such as the nature of the business, the number of owners, liability concerns, and tax considerations. Entrepreneurs should carefully evaluate these factors before deciding on the most suitable structure for their business.